Tesla stock has been going absolutely crazy ever since May 16th. That was the day that it was confirmed Twitter was getting a new CEO and Elon would be back at Tesla full time. Although he never technically left, that's how markets felt about it at the time. But I think more importantly than what's already happened is obviously where is Tesla going to go over the next couple of weeks and the next couple of months. In the short term, it's pretty easy to see what's going to happen. Over the next 6 months or so, there are some risks out there that you need to be mindful of. So that's what I want to get into. We spend a lot of time talking about the bullish thesis. Rightfully so. I mean, we've been spot on. So it's paid off. But what are some of the potential problems out there? We're going to get into all of that and much more here in this video. Hit the like button, subscribe to the channel, and hit that notification bell if you guys want to stay up to date with all of this information as soon as a video is released. So let's start off this video with what's going to happen in the short term. It's pretty easy to see what's going to happen in the short term, and if you guys follow this channel, if you watch these videos, you're probably going to have a good idea of what I'm going to say. Tesla stock's going higher. Okay, that's just the simple fact of the matter. You've seen downgrades. You've seen people talking negatively about valuations. You've seen the bearish analysts starting to try to affect Tesla stock and get it to go down. They haven't had an effect. That's because there are fundamental reasons why Tesla is going higher. Now, obviously, the charging deals they've made with GM, Ford, soon to be Toyota, Hyundai, Rivian, probably many other automakers, is potentially the start of full-on licensing of full self-driving or other battery technology. So many good things, you really can't put a dollar amount on it. This is really the first cooperation that you have seen with Tesla and legacy automakers in a big way. So I think that is very fundamentally positive we've seen recently. Like I said, Twitter has their own CEO now. Elon is more focused on Tesla than ever. That's a big reason why Tesla stock has done what it's done. That's probably the biggest factor from the market's perspective. Literally ever since May 16th, the stock took off, right? So those are two factors. I also think the markets are more accommodative compared to 2022. Obviously, we're close to the end of rate hikes. The economy's holding up pretty well, at least in America. And potentially, you're going to get rate cuts as soon as January of 2024. At least that's what the markets are pricing in. And, just overall more accommodative towards higher valuations. That's why an Apple, a Microsoft, all your big tech is technically overvalued. Now, question is, which company is going to grow into their valuation the fastest, or that's going to grow into its valuation? And obviously it would make you a lot of money at that point. And I think the markets are trying to give Tesla the benefit of the doubt. Right now, you're only expecting 27% vehicle growth, delivery growth, maybe I should say, for 2024. That's very low for Tesla. You have to go back to 2019 to get about 25% delivery growth. You're not pricing in a whole lot. So this valuation concern that analysts want to talk about, well, if Tesla gets their margins better, which it looks like margins should be improving from here, you haven't seen any more price cuts, and Tesla has better growth than 27% in 2024, your valuation is going to change dramatically. And Tesla could be a cheap company at that point. Valuation ultimately depends on the growth rate. If Tesla's growing at 35% with a 50 PE, or Apple's growing at 7% with a 30 PE, which one do you want? Obviously, it's Tesla. And that's literally the actual numbers there. So which one's more expensive. Well, on a PEG ratio, if you factor in Tesla's growth, Tesla's actually cheaper than Apple or some of your other big tech names. So I think valuation is going to really turn into a tailwind once Tesla does start to improve margins and beat estimates for deliveries. Now, that is the biggest catalyst here in the short term. It's all about deliveries. Your deliveries for Q2 are going to come out on July 2nd. Now, from now until July 2nd, today is June 24th. That means you're going to have this next trading week. And then over this weekend, or this next weekend, you're going to get delivery numbers. That will be on Sunday, July 2nd. So this week we're heading into, it's probably going to be very bullish for Tesla. You might ask, why is that? It's all about the short positions. So shorts have taken massive losses in Tesla stock. Massive losses. Like, they are huge. 15 billion in losses. That's more than what you've seen in 2021 when Tesla stock increased, dramatically in value. So short sellers were really caught off guard with this change in market sentiment, with the change in kind of what's happened with Tesla, right? Elon kind of focusing on Tesla more. A lot of people expected the worst out of Tesla, and that's why it traded at $100 per share. A lot of shorts were taken, right down here. So they're down a lot on their short positions. Now think about this logically. Do you want to be massively down on a short position heading into a potentially very bullish catalyst if delivery numbers beat expectations? Expectations are around 445,000 deliveries. If Tesla comes in at 460, 480, or 500 plus deliveries, do you want to be short on Tesla when that news comes out? Absolutely not. So we see this happen quite often where the week before a catalyst, whether it's earnings, whether it's deliveries, whether it's investor day or AI day or any other event Tesla has, you tend to see Tesla stock perform well, as it makes sense for shorts to reduce some of their short exposure or outright cover on their short positions, right? They don't have to completely cover, just them kind of covering on half or a quarter makes sense sometimes on a risk to reward basis for these hedge funds, and it does help to drive Tesla stock leading into an event or a potential catalyst. I don't think this time's going to be any different. I think, in fact, this time's going to be a little bit more dramatic. I think this upcoming week could be very bullish. I think Tesla could reach $300 per share before July 2nd. Again, especially if shorts start to cover on short positions and people start to turn a little bit more bullish on the delivery expectations, right? Now, what you've seen actually recently with Tesla is Tesla has actually come down by a little bit. You hit a high of $277 per share. You're currently trading at $253 per share. But what keeps happening is Tesla in pre-market will trade under $250, and then as soon as you open for the cash open at 9:30 in the morning, Tesla stock jumps up above $250. There's just so much support at $250. It's probably trading algorithms. It's probably, hedge funds and retail investors buying the stock once you get under $250. But whatever reason it is, probably all those reasons, Tesla stock just does not want to fall. And I don't think heading into a potential catalyst that could be very bullish that you're going to see a big down week this week. It's possible. I'm not a financial advisor. Anything's possible. But I do think Tesla could go a lot higher in this upcoming week. Another factor that I've talked about more times than I probably should here on this channel is getting the RSI down, but doing it in a way where the stock price itself does not collapse. The relative strength index, the RSI, literally tracks the relative strength. So if Tesla trades down one day, it goes up one day, it's just volatile back and forth, the RSI can fall because the relative strength is falling. This is what you want to see. it's hard to keep going up in a straight line. That only lasts so long. But a stock can trend higher for a very long time. So you wanted to see the RSI come back down under 70. You haven't been under 70 since May 26th. Really, May 30th is really where you broke over 70. Now you're at 67.61, and you're still at 253. It's not like you're at 220 or 230. You only fell a little bit. You only fell from the high about 7%, which is pretty decent, right? But it feels like the stock's kind of just traded sideways. Doesn't feel like you've fallen a lot. So from here, this RSI resetting into a more normalized zone will give Tesla room to really rally this week. And I think you could continue on this trajectory and, like I said, be approaching, if not over, $300 per share by this upcoming Friday. So in the very short term, that's what I think is going to happen. After July 2nd, obviously it depends on if you beat the estimate or not. If you don't beat the estimate, you're going to have a 10% down day. That's just it, okay? If it's really bad, you could have a 12% down day, 15% down day. Doesn't look likely. You've seen very good preliminary numbers coming out of China. Super good numbers coming out of China. So it doesn't look likely. And I wouldn't bet on that by any means. Not a recommendation, but don't buy puts on Tesla. That's asking to lose money. Now, if it's better than expectations, that's where you could really break above 300, maybe as high as 350. If delivery numbers are over 500,000, you probably go into 350 or 400 pretty quickly. So that's what I see in the short term, next couple of weeks here. The longer term is a little bit more uncertain because China, the recovery, not doing nearly as good as what everyone hoped it would. You're not really seeing Europe doing well. I mean, Germany's in a recession. France is pretty close. The UK is pretty close to recession. Other European countries are not doing too well. And that's also a big market for Tesla, as well as China, as well as America. And it's questionable if America will go into recession. Who knows? The consensus is it will. But the data we've seen has been pretty good so far. Demand for Teslas, really all vehicle makers, GM, Ford, they're saying demand's great as well. So who knows how they would be affected if we did go into recession. But it's possible we do go into recession. And it's not until average, everyday Americans see on the news, the U.S. enters a recession. Or just entered into a recession. Breaking news. That's when people tend to slow down their spending. It's not when Wall Street is expecting a recession. That's not when people slow down their spending. Average Americans slow down their spending when they are hearing about a recession on the news. That you're in one. People are like, oh crap, maybe I should spend less. Right? So that's a potential concern. The other concern I have kind of goes in line with the recession, but it's student loan repayments. Now, this will start in October, so you have quite a ways here, and that's going to take away a lot of discretionary income. Matter of fact, the median payment on student loans is about $400 for every borrower. That's almost a payment for a Tesla. So how does that affect demand potentially for Tesla is a little uncertain. It's possible that it gets blown off, that it's not even a thought process. It's not a big deal at all. That's possible when, in reality, if you took out student loans, hopefully you're making more money, right? Hopefully you used your degree. If you didn't, and you're watching this video, I'm sure you're doing fine. You're investing in yourself, in the markets, growing your knowledge base. But average Americans, right? If you went to college and took out student loans, hopefully you're making good money. So maybe it has no effect on anything. But I think those are really big uncertainties towards the end of this year that we cannot forecast. And those are really the two concerns that I have, which is pretty good for Tesla. I think there's a lot of tailwinds to the valuation that could come if Tesla does bring in better profits, better margins than what the markets are expecting, I mean, the valuation is going to change so quickly, it's going to be ridiculous, right? If Tesla starts to bring in, $5 or $6 of EPS for full year 2023, well, the valuation is going to be a lot different than where it is now, and it's going to be a lot better. So it's not going to be such an issue. As well as forward expectations. Better deliveries, better earnings if we get those this next quarter for Q2. It's going to make the estimates go higher for the rest of this year as well as 2024, and that also helps out the valuation. Now, I also think in terms of a potential US or global recession and student loan repayments, I also think at the same time, Tesla is going to see a really good return on investment, a good ROI on advertising, and they will continue to advertise and really introduce a brand to the world. And Tesla's really been word of mouth. A lot of people don't know about Teslas. If you're not in the markets, if you don't know somebody directly that owns a Tesla, you don't know much about Teslas. And I think that is exponentially going to drive Tesla's order book higher. I think a year or two from now, Tesla's order book could be 5 or 10 times where it is today. Meaning Tesla, which is crazy, Tesla could have a production concern, not a demand concern, like investors were fearing in January of 2023 when Tesla hit $100 per share. Investors might be worried that Tesla can't produce enough vehicles because there's so many people that are trying to buy them. That's how dramatic I think advertising could be to Tesla's business in a positive way. So if that does play out, in which I expect, I mean, by the end of this year, you could be $500 per share. That's or higher. I mean, it just depends how successful advertising is. I think it's going to be a very successful endeavor, not to mention any of the other potential catalysts for Tesla. You've already priced in a lot of bad news with a 27% expected growth rate next year. That's far under Elon's 50% target. So I think for these reasons, I'm very bullish in the short term. I'm bullish in the midterm, again, the next 6 months or so, but a couple concerns as well that are a little uncertain that we can't forecast right now. So that is that. Now, let's talk about this short position here briefly, because I've talked about this. I think you're going to get a short squeeze with Tesla. Shorts have not started to cover yet. I think that's also important to point out. There has been no short covering on a large scale. Short positions currently sit at $23.8 billion in Tesla. That's a lot of shorts. That's a lot of shorts. And again, that's going to cause a lot of buying pressure this upcoming week, as well as likely after July 2nd. I think Tesla's going to beat their estimates. And then shorts are going to be in a very bad situation. And I think just the liquidity levels of this market, liquidity is kind of running dry. A lot of different things you could look at, like the M2 money supply and a couple other variables. The banking crisis would be a good one. It's kind of showing there's not a lot of money out there. A lot of money is sitting in commercial real estate, or it's sitting in, money funds out there. It's not really too liquid all the time. So I think that could also be a problem if shorts don't manage their short position. I think you almost have an obligation to manage your short position, especially on Tesla, where Tesla could easily double from here. I mean, that's always a possibility. So these are kind of the things that I am looking at. Again, to reiterate, by the end of this week, you could be $300 per share. By the end of this week, you could be $280 or $290. Odds are you're higher than where we are now. That's the bottom line. After July 2nd, you could be a lot higher than where we are now. Or you could fall. I don't expect it, but it's possible. And then over the next 6 or so months, if things go as I expect they will, Tesla stock could be at all-time highs. Again, I see no reason why Tesla is not even to their August 2022 highs when stocks such as Apple, Microsoft, Nvidia, Google, Amazon, all of those guys are above their August 2022 highs by quite a bit. I don't see a logical reason for that. When that reason does arise that maybe Tesla's not doing well or maybe the stock is overvalued, I will bring you guys that information. But I'm not seeing any indications that that is the case as of right now. So that is going to do it for this video. Hopefully you learned something. If you did, if you like my perspective, hit the like button and subscribe to the channel. You guys enjoy your days, and I will see you in the next one.